Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Market Movers. I'm filling in for Ben Watson. He'll be back again next week, but we have a lot to talk about. New inflation numbers are out today, and I want to check to see what the ripple effect might be across a range of markets. We're going to be looking at the stock market. We're going to be looking at what's going on with commodities, looking at sectors and individual securities. Lots to talk about. Before we get to any of that, though, let me first of all say hello to everybody that's chatting in out there on YouTube. Hello, all you familiar people. Jay Richardson, Mighty Mouse, Lola, Scott, Greg, Vic, everybody else. Thanks for joining us week after week. We always do appreciate your attendance and your contributions to these discussions. If you're here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the live stream is concluded, enjoy the recording, but be aware that you're invited to join us in the Friday live discussion. We kick things off here promptly 3 Eastern Standard Time every week. A great way to wrap up the week. It's our final webcast offering each Friday. We'd love to have you here. Now, I also want to let you know that my very good friend Barb Armstrong is joining us in the chat. She's going to be addressing any questions that I can't get to. Barb and I have worked together for years and years and years, and she brings a lot of knowledge and experience to this now. And so I really appreciate Barb's assistance. Thanks, Barb. And everybody, if you have an account on X, you should be following your favorite presenters on X. Best place to connect with us in between these live streams. You can find Barb there at Barb Armstrong CS. And you can find me on X at Cameron May CS. But let's get right into this. Very first thing that we need to do, of course, is to consider the risks associated with trading and investing. Risk is real, so bear this important information in mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or personalized investment advice. Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including the loss of principal. Okay, so let's set a quick agenda for today's discussion. I want to start with a broad discussion of the major market indices. So let's look at the S&P and the Russell. We'll start to look at some other asset classes like commodities. But we also want to take a glance at what's happening with the sectors for this week and talk about specifically the announcement that might be moving a lot of things, shifting a lot of the chess pieces out there. The inflation numbers that just came out today. We'll finally zoom in on a few stocks that are moving and then talk quickly about what an investor might be looking for next week. All right. So let's go right to the Thinkorswim desktop. Let's have a look at the S&P 500. I wanted to look at this quickly through one technical lens, but then get a historical perspective as well. So with the S&P, it's been actually net kind of a flat week. If we're just focusing on the last few days of trading, it's interesting. We closed last Friday here, and if you look at where we are right now, just a tiny fraction of a percentage point down. It's been a little bit of an up and down week. That's very typical. Some technicians might find it interesting that we pulled down to that 20 period that we might consider this the short-term moving average. So we've dipped down to close to short-term average prices, caught a bit of a bid off of that, and now we're bouncing. And for some, it's literally a technical bounce, looking like we're moving toward closing bell for a close above the high of the low day. Interesting little candle formation there. And at the bottom, yesterday's candle, another possible bullish clue for those that might have convictions that the S&P still looks pretty bullish, even in the near term, even defined by this week's activity. Yesterday's candle, what label might you give to that? If I were to ask you, what is this candle? Some of you might say, looks a little bit like a hammer candle. I can say that. Yeah, looks like a possible hammer, except usually a hammer has a fatter head. I don't know about the nails you're swinging at, but if I have a little tiny pointy hammer, it's hard to hit the nail. Instead, this looks a little bit like a possible dragonfly doji, a little bit less common candle pattern. But in any case, looks like bullishness bouncing off these lows. So from a technical perspective, things still looking pretty strong. Obviously, it's not a guarantee that that's where we're headed, but I wanted to put this in a historical context. So let's zoom back out here. And I wanted to see, now that and you've seen this probably in some of my other webcasts recently, but we're moving toward the end of September, and we're actually right in the middle of a period of time that's historically been kind of bearish for the markets. So here's how we might discover that. We're going to go up and change the chart style from a traditional or standard candlestick style to a seasonality chart. And this chart shows us how the S&P has done this year. That's the green line. The red line down at the bottom shows us how the S&P has done last year, so we can see if there are some similarities between those two time frames. But I want to get a longer term perspective, so we're going to switch the time frame up here to a 20-year, one-day chart. Lola says, Dragonfly dojis, do they show indecision? As is typical, Lola, with dojis, yes. Typically interpretation of some indecision, but if it happens at the bottom of a down move, it may be our traders deciding to move from short-term bearishness to short-term bullishness. And the confirmation would be typically a close above that Dragonfly doji high, which it looks like we're going to get today. Obviously, trading hasn't concluded yet. Still 55 minutes of trading left. We'll see. But this is a 20-year chart down below. This is now showing us how the S&P has performed over an average 12-month period. And I want to zoom in on that. So let's change up our y-axis over here to a manual view. And that allows us to come down and zoom in on just that portion of the chart. And so now what we can see as we look at this from September, mid-September into mid-October, this is average performance of the S&P 500 over the last 20 years from the middle of September to middle of October. So we're kind of in the middle of a bearish cycle historically. However, let's see, today is the 26th. If we look at where the 26th falls, that's about right here. Actually, generally, that's pretty close to the start of a bullish advance into the rest of the year. Doesn't mean that 2025 is going to hold exactly that pattern, but for some technicians, that might be interesting. And also, there could be, if things hold according to historical tendencies, some additional choppiness for the next couple of weeks. Time will tell, but I think that's sort of an interesting historical perspective. Let's clear that drawing set. And let's pop up here. Let's switch this back to a one-year chart and go back to just a traditional candle. And I want to have a quick look at what's going on with the Russell. Russell looking very similar, trading generally, boy, since we got lows, from the time the Russell first crossed its 20-period moving average, it's pretty much held that as a support with occasional infrequent departures below the 20. But that's been a pretty good support, and today has taken us right down to those lows. Here's a bit more of a traditional candle pattern bouncing off those lows. Again, a bullish candlestick with a possible confirmation. We'll see if that closes above those highs today, but even on a day-to-day basis, technically looking pretty strong. All of this with the backdrop of what's the big news today? Big news event of the day, most likely. Now, obviously, everybody has their own little corner of the marketplace they might be focusing on. But the one that a lot of traders might have been paying particular attention to were those inflation numbers. And the inflation numbers, if you didn't catch them, headline PCE came in at 2.7%, right where it was expected to be, a little bit hotter than last time. The core PCE came in at 2.9%. So inflation still relatively higher than maybe long-term target objectives for the Fed, but comparatively modest. And so what that may allow the Fed to do, maybe the Fed would shift their focus to other things like jobs, but it might allow them to be, a little bit more inclined. If inflation appears to be at least somewhat under wraps, could increase the probability of a rate cut come that October 29th event. That's now looking at about an 86% probability according to the CME's CME Fed Watch tool, but we'll see. In any case, looks like the markets have generally received that news fairly well. And let's see what the seasonal tendencies of Russell might be. I think there might be some interesting insights for some here. So let's pop back up to our style, switch this back to our seasonality. Let's go back to a 20-year view and zoom in again. And look at September and October. This is pretty different. We haven't hit those lows for the Russell. So maybe for those smaller cap stocks, it could be another couple of weeks. Now, again, 2025 is not required to abide by historical tendencies, but this may cause some to look, okay, maybe we'll focus more on larger cap stocks for the time being. All right. In any case, let's go back to our 1-year chart. Let's switch this back to a traditional chart. Standard. There we are. And let's shift gears a bit, see what's going on, what has been the impact on bond yields of this inflation number. So let's talk about the theory there for just a moment. If inflation is steady, appears to be at least somewhat under control. Yeah, the headline number did notch up a little bit. We have to acknowledge that. But the probability of a rate cut apparently just went up. So right now, we're at 4 to 4.25, and it looks like the most likely scenario for October 29th announcement is to cut that down to 3.75 to 4, which would be 25 basis point cut. What would we typically expect if rates are cut? Oh, if we're cutting rates, cut yields, right? Shouldn't yields go down? Let's see what's going on with yields. I'm going to look at the 10-year. And as we do this, we're going to be looking at a few futures products here, but we need to bear in mind regarding futures that futures and futures options trading involves substantial risk and they're not suitable for all investors. So please read the risk disclosure statement for futures and options prior to trading futures products. I'm going to post that. Let me post that disclosure link here in the chat for those that are here in the live attendance. There we go. There we are. Just know that futures accounts are not protected by Securities Investor Protection Corporation, SIPC. Okay, so with that important information accomplished, let's look at a few things. So here's the yield on 10-year bonds. And we might think, well, if the expectation is for a rate cut, shouldn't those yields go down? Actually, yields are still climbing. That just it seems like, all right, the whole economic model is broken. Well, what might account for rising yields even in a rate cut environment? It's a good question. And the answer, it could still be in inflation. I don't know exactly what's going to be driving yields in one direction or another, but there can be, some guesswork here. And a very likely explanation is if inflation is high, investors are still going to demand yields ahead of that inflation number just to net anything. So there may still be pressures on yields to go up. So yeah, Scott, inflation expectations, exactly right. So yields continue to climb on the 10-year. If we switch this over to the 2-year, we've had, in the view of some, a return to sanity with the longer term yields outstripping shorter term yields. I think we're at about a 50 basis point positive yield curve at this point. But yeah, the 2-year popped. Again, maybe reflecting, okay, some stability in inflation. Could there be still some concerns? Could there be an undercurrent of concern out there for increased inflation? That's certainly a possibility. But I did want to get a quick view of what's happening with yields. Another quick thing that I wanted to check is what's going on with commodities and maybe what we might consider to be, for some investors, a traditional hedge product against inflation, and maybe the new kid on the block for a hedge product. I want to explore a theory that's been batted around there. But first of all, let's look at gold. If rates get cut, what does that commonly do to the dollar? Typically, it weakens the dollar. And if we have a weaker dollar, what that literally translates to is the dollar doesn't go as far. It costs more dollars to buy stuff, including commodities. So gold or oil or who knows, Bitcoin. But regarding gold has been making higher highs and higher lows, actually outrunning the 20-day moving average. So could be a lot of cash flow toward gold pushing up to those all-time highs. Little bit of a pullback, a bit of a bull flag here, but bouncing again. So gold is pretty much behaving in a way that would be consistent with sort of a traditional economic model as far as rate cuts are concerned. But this can also be driven by other things, demand for, yes, inflation hedges, but just a diversification motivation for a portfolio. But what I wanted to talk about here with gold pushing up to all-time highs is, for some, there's a new kid on the block as a possible inflation hedge. And they say, oh, this new person, this new asset is standing in now for some investors in the place of gold, and therefore, theoretically, there should be a strong correlation between the two. And of course, what I'm talking about is Bitcoin or cryptocurrencies. Now, as we move to talking about cryptocurrencies, I do have to give you a quick heads up, some important disclosures there. Digital currencies such as Bitcoin are highly volatile and not backed by any central bank or government. Digital currencies lack many of the regulations and consumer protections that legal tender currencies and regulated securities have. Due to the high level of risk, investors should view digital currencies as a purely speculative instrument. Okay, so with that as a backdrop, let me pop up here. I'm going to clean up our charts just a little bit, and I want to shift the technical focus. So here's gold, and I hear it proposed that Bitcoin is sort of the new gold. That kind of makes sense. Aren't they both sorts, depending on how we view gold, at least a surrogate for a currency? Aren't they both conceptually a hedge against inflation? Well, here's a comparison that someone might do. Let me bring up Bitcoin. And you can kind of see right away, left to right, there are some surface similarities between the performance of the two asset classes. But I want to do a correlation study. Now, how many of you have used the correlation study before to see how closely related to stocks or to assets, maybe to indices or a stock compared to an index or whatever, how correlated the two are over time? Here's how we might do that. I'm going to come up to the little edit studies icon, and let's look at the correlation tool. I'm going to add this to our chart. By default, it's going to be attempting to compare Bitcoin to the S&P 500. I'm going to edit that, though, and let's compare this instead to gold. I want to explore this theory that the two are filling a similar role and therefore should be, in theory, performing fairly similarly. There should be a strong correlation between the two. But if I click OK to do a comparison now, what this is going to be doing is it's looking over a trailing 10-day period to see the relationship between Bitcoin and gold. And if there's a strong relationship, we'll see a value of 1, a 1-to-1 relationship. If there is not a strong correlation or an inverse correlation, it'll be closer to a -1. So let's click Apply and click OK. And here's this line. And what immediately stands out to me is this line is going up and down and up and down in wide ranges. So the typical interpretation here is the closer we get to 1, like a couple of weeks ago, the correlation value of Bitcoin versus gold was about 82. That's very close to 1, 0.82, very close to 1. That means that there's 82% correlation between, I don't mean to draw a line there, ignore the line, but an 82% correlation between the movements of Bitcoin and the movements of gold over the 10 days leading up to that point. Well, what's that correlation right now? We're at -88. There's actually, over the last week, whatever gold has done, Bitcoin has tended to do the opposite. So sometimes there's a strong correlation, doesn't seem to last. Sometimes there's a strong inverse correlation, doesn't seem to last, but really over time, not much there at all. So if we think of Bitcoin as a surrogate for gold, maybe it sounds good, doesn't seem to play out in reality. All right. So I just thought that was interesting to see how that was going right up to this week. But I want to leave us some time. We've looked at the broader markets. We've talked about what may be moving things right now. Looked at a couple of the commodities. Let's see what's going on with some sectors and then individual stocks. Okay. And I always like to sort of pull back the curtain. When I show something on a chart, I want you to be able to follow along with what I'm doing. So I'm going to come up here. Let's remove the correlation from our chart. And I want to switch this up to a sector by sector review. Now, John says, let's do a correlation between gold and other things. I don't have the luxury of time, John. We have about 8 minutes left here. So let's go over to our watch list. And I want to quickly look at a different watch list. Let's go to the public watch list of Thinkorswim. And I'm going to look at one called sector indices. Let's look at the S&P 500 sector indices. And what this does, it shows us the 11 sectors that make up the S&P 500, but they have these sort of symbols that don't really mean anything. So I'm going to add something to show us what the titles of these are. And it's called the description column. Description just means the name. So let's add that. Click OK. Oh, and one other thing I'm going to do for now, I won't need the market cap. Let's remove that. There we go. Do a little quick repositioning of things here. So what this allows us to see, here are the 11 sectors, and then I can just click through those. So here's consumer discretionary, and how's that been going? It appears to be strong. Let's give that some important context here, though. One other tool that we might use is we're looking at the sectors. Let's do a comparison. Let's do a relative strength comparison to see if a sector has been relatively strong or relatively weak compared to the S&P 500 recently. There we go. So the consumer discretionary has been rallying, but so is the S&P. As a matter of fact, discretionary versus the S&P has pretty much been flat. So it's been performing right along with the S&P. If we see the blue line going up, it means that our sector is stronger. If we see the blue line going down, it means the sector is weaker. The S&P is stronger. So which sectors have actually been leading things? We could click through this very quickly. See, it isn't utilities. It's not materials. If we skip over to information technology, yep, it's those tech stocks that have been really outstripping things in performance. You can see the left to right of price looks very similar. Looks the same as the S&P 500 in a lot of ways, but it's actually been moving up even more rapidly. That's why we see this blue line rising with price rising, unlike what we saw in consumer discretionary. So that's a nice combination of tools that a trader might use to gauge, okay, where is the strength? And maybe even, where's the emerging strength in the sector? Sometimes the sector falls out of favor, and then the spotlight shifts. Can anybody tell me which sector they think the spot might have just attracted a new hot spotlight recently? From at least this technical perspective, it might be energy. Look what's happening with energy. Energy has been struggling relative to the S&P 500. If you look, it's been going up, but everything else has been going up faster, at least everything else being defined as the S&P 500. But energy just broke out of a downturn trend line and at the same time broke through horizontal resistance. And for some technicians, this might mean this is a new day for energy. We'll see. That's an interesting development over just this last week for energy. Now, we've had the broad market perspective. We look at the commodities. We've learned some new tools, or maybe these are familiar tools to you for gauging what's going on with the sectors. But I wanted to have a look at the individual stocks that have been moving. And using these tools on the left might help the trader accomplish that as well. So I'm going to shift things up again one more time. First, I'm going to remove our relative strength tool. And I'm going to change this to a different watch list. Let's go for the S&P 100. We're looking at the great big stocks of the marketplace here. And I'm going to shift up my column set again. I'm going to remove the description. We're going to add the market cap back in. Let's add that. But I want to add one more thing, and that is the percent change. because we want to see which stocks are really moving very rapidly, percent change. So let's add that, click OK. And so now we have 3 columns. Let's do a little quick repositioning. Click and drag. There's the last price. There's the market cap. Here's the percent change. And I've organized this from the stocks that are moving most bullishly today down to most bearishly. And you can do that by clicking on the column heading. There we go. So we have INTC. What's going on with Intel? Intel has been absolutely rocketing up. Does anybody know what's going on with Intel? NVIDIA and Intel have reached sort of a new partnership agreement. NVIDIA taking about a $5 billion ownership in Intel, and that really seems to be driving stock up. And interestingly, when that news came out, there was a big, strong gap to the upside. Now, let me draw this another way. The top of this gap, down to where it started, right down here, raced up, and then you'll see we quickly surrendered about 50% of that gain. And for a Fibonacci trader, that could be an important reversal point. Maybe we're pushing up to that next Fibonacci, which seems to be just a little bit higher. We'll see. But Fibonacci's have seemed to have played a decent role recently, like in this most recent move back here. Big move to the upside. Raced up, pulled back 50%, and then advanced, and look where we hit before seeing another pullback. Now, that's not a guarantee that that's how things are going to go into the future, but that's how things have been moving. A couple of other stocks that are on the move. Ford breaking out on an analyst upgrade, possibly. We have IBM. IBM has just been going up and up and up. That's from a collaboration with HSBC. The IBM processors seem to have helped HSBC's bond pricing be more efficient, maybe a little bit more predictable. Could be a number of other reasons contributing to these, but those are some of the stocks on the move, and those are some of the tools that might support reviewing that. All right, guys, so it's about time to wrap this up, but just a few things that traders might be keeping an eye on for next week. We have a few earnings announcements, not very many. If we were to go to the Market Watch and we look at the calendar, if we check the box for earnings and we move things to next week, you'll see we have Carnival Cruise Lines. Nike is probably the headline for next week. It's ConAgra and Paychex, Lowe's. There we go. Kind of a quiet week for earnings. Similarly, quite quiet on the economic news front. What could move things? So next week on Tuesday, we have the ISM Manufacturing Index. On Wednesday, auto sales. Thursday and Friday, there's some jobs reports coming out. We have the initial jobless claims, which are expecting, that recently the jobless claims have been shrinking, which is conceptually a good thing. Friday, the employment situation is expected to pick up a little bit. I always hesitate to even talk about those because we saw a massive revision this year on the published job creation, and then the annual revision was massively downward adjusted. So yeah, we have to sort of take it with a grain of salt, but we'll see, everybody, how what next week brings. But there's a recap of how the week has been. I hope you discovered some new helpful tools along the way. There's my wife calling me. I'll tell her to call me later. Anyway, let's make sure she doesn't call me back. Everybody, thanks for giving me your time today. Hope you've enjoyed this recap. It was my pleasure to fill in for Ben. Barb, thanks for helping out in chats. Everybody, follow Barb and me on X. If you have an account there, you can follow Barb on X at Barb Armstrong CS. You can find me on X at Cameron May CS. This is the best place to connect with me in between these live streams. And Barb's very active here as well. If you reply to one of my posts, I try to reply right back to you. For example, I asked for opinions here. Here's what the numbers were for inflation. What do you think for next time? Nobody knows for sure, but that'll lead to an interesting discussion. Anyway, also make sure that you're subscribed to our Trader Talks channel. You can, so the full name of the channel is Trader Talks Schwab Coaching Webcasts. You can subscribe by going down the lower right-hand corner, click on the subscribe button. or you can pop down below the video stream, click on the subscribe button there. It only takes a second, doesn't cost anything, but this is where we house our playlists of previous webcasts, and you can join our live streams as well. So it gives you access to the full range of educational offerings from Schwab. All right, guys, time for me to let you go. Thanks for all the thumbs up. That's always appreciated. I will see you in a future webcast. I'll also look for you on X, but whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.